Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, December the 3rd. The year's 2021. Let's talk trading. It's time for the weekly wrap up, and it is NFP Day. And just a reminder, these videos are for educational purposes only. Your results may differ from mine. NFP Day. So for the month, you can see we're 61 pips off the open. And looking here, even though this is the weekly wrap up, I should probably mention what's going on for the week. All the gaps filled. We're 97 pips off the open, 41 pips off the low, and 130 pips off the weekly high. So you can see big red weekly candle right through the previous week's low. If we look at the opening ranges, the opening range for the month, we're 27 pips below that. The opening range for the week, we're 52 pips below that low. Both of these trades were triggered today. And we also crossed below the monthly open today. We're 61 pips below there. So once again, the idea this month is keeping it simple. These simple trades could have netted a nice bunch of pips. And if you would have stacked on, you'd be up over 100 pips. And for those of you who don't know what I mean by stack on is, if you would have entered short at 95, entered another short at 87, and entered a third short at 61, you add these three numbers up, and that's how many pips you'd have in your portfolio. Once again, 408 pips below the yearly open. You can see we're below all these opens. We broke out of yesterday's inside bar at 32.60, call it 66, even though it's at 66.9, 32.67. What's the point, right? Or a pip between friends. But it should be slightly obvious that there was profit to be made taking the short at yesterday's low. A lot of, since it's NFP day, we've got a whole bunch of pairs over 100 pips. Looking at the buy zone, you had a long trigger during the NFP release, which you would most likely want to have ignored that. Maybe you would have taken the daily open cross. You could have picked up some pips that way, but then price dropped and dropped hard. Red Rats got a chance to feast, and so did the Green Rats. We almost hit the daily S3. Hold on for a second. Okay, back to you. Let's see. It said near pivot was short, so it looked like that was an accurate call there on the pivot trading plan. We took out today's pivot. We took out the weekly pivot. And we're missing the monthly pivot. So we might have a missed pivot this month. Just have to wait and see. Monthly pivot. In and out of the upper wick zone and in and out of the lower wick zone. For the ranges, let's switch over to weekly. So 176 pips, 50 percentile, which is 4 pips more than last week. So right in the middle, high minus previous high. We didn't break out. Previous low minus low, we broke out 83 pips to the downside. That was a nice trade. High minus the close. So if you one off the weekly high, you be up 136 pips. If you bounced off the weekly low, up 40 pips. Taking the weekly open crossover, 38 pips to the north, 138 pips to the south. So once again, simple horizontal line trades. You just have to plot these levels and then take the trade at the level. Similar to our intraday scalping type trading using the Walmart lines, sweet spot golds here. Had a long trigger last hour at 40, good for a couple pips. The short trigger would have netted you about 8. So once again, small gains hour after hour adding up. But you can see here, right around the NFP, there was trades to the north, 80 to almost 33.10. Then to the south, once again shorting at 80 all the way down to 50, and then shorting at 40 all the way down to the 10. Simple trades, but this is NFP day. Don't expect this every day. And remember, these videos are for educational purposes only, and your results may differ from mine. And these disclaimers always make me laugh. But that's just like telling people don't take the what your hair dryer into the shower. I mean, it's just the way this world is. You just have to say these disclaimers because you just never know what somebody's going to do, and then they're going to sue you. Anyway, um, looking at the higher low, lower high right now, we just had a highest M5 low put in at 32.38, good for about 6 pips to the short side. Earlier, we had a lower high put in at 32, call it 16. You see it did some crisscrossing. This is why you take your pips, a couple of pips at a time before the market takes it back. And that's why you have to come up with a simple exit strategy to make sure you take pips and you don't take losses when you can. And now I just want to go over a TRO plot. We talked about that indicator last month, but I just want it's a good illustration how something simple can net you pips without a bunch of thought and a bunch of work on your part. So long as you do your risk management, you can just take these trades. So, for example, today, the last week's low was breached right here. These brown lines are the weekly lines, and you can see here 1, 2, 3 times it was breached. Weekly low breakout would be strong. It hadn't quite hit its pip range. It was much lower percentile. So you want to look at it and go, okay, it's at a low percentile range wise, so price needs the range, so it's more likely to break out to the downside than it is, to that weekly upside, which was up, 200 and some pips away. So, I mean, anything could happen, but when price is already breached it once, twice, usually the third time is when it's going to do it, huge. And it did. Previous day's low, we broke out once here, we reversed, broke out a second time here. And the previous day's open is usually the current day's, or I'm sorry, this is the previous day's open. So when price has gone up like it did on the previous day, and then you see price coming back down, that candle just got covered. So all that movement from here to here just got covered. The sellers took back control. But just playing simple H1 candle color, or like I said, I've been liking to use the M30, and you can see here what price did. So it even gave you an extra time here. another opportunity to take that short. So if you would have entered and exited as price started coming back on you, you see price failed to make a higher high and came back down. Just take your chances, put your stop loss on, and see what happens. Trading doesn't have to be that complicated. It really doesn't. But there's just so many people teaching so many things with so many calculations and indicators and squiggly lines, you name it, and all these ideas and concepts, when all you can do is use horizontal lines based on open, high, low, close. You might throw in the midpoint and pivot point for good measure, but you don't have to get any more complex than that. I mean, you don't even need the midpoint. You don't even need the pivot. You can just use open, high, low, and close and just trade at those lines. That's all you really need to do. And you just wait for your opportunity. And you can see how many opportunities you had here. And you take those trades. So some of you might have already realized that between the open and the low from yesterday, that's the wick zone right here. And we know price doesn't like to stay in the wick zone. And you just trade those breakouts. And once again, profit to be had. You just have to take it when you can. So I hope it's starting to sink in with traders, especially those of you who have been following me over the years, or maybe just this year, that if you just use some horizontal lines, real simple, follow the candle color, have your stop loss in place, trading doesn't have to be that difficult. Yeah, of course, we'll put in some, different indicators. I write indicators. In fact, I've got some working on batch 12, or not batch 12. I think it's batch 9 for this year. And for the final batch of the year, got a couple of good indicators for you. Got some ideas for next year already. But the thing is, the indicators are kind of like training wheels in some cases, like this one here, because you might not be able to spot the highest low and the lowest high that quickly. And so you just let the computer do the work for you, but it's still putting in a horizontal line, and all you have to do is trade it. And you put some rules around your entries and exits. But once again, simple rules. You should be able to fit on a 3x5 card. Maybe 3, 4, or 5 rules, but no more, because then it gets too complex, too easy to forget, too easy to miss something. But just, 3, 4, or 5 simple rules is all it takes. And make sure you employ your money management. You do those, and probably you'll see some really good results. But I see traders coming in new, at least they're new to me. They may have traded for years or months, and they always want to have something fancy. So, fellow traders, that's it for the week. I hope you had a profitable week, profitable NFP day. Hope you have a fun and safe weekend. Always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.